Good morning. I'm Angela Giroux, publisher of the Bauman Letter. And before we get into today's Your Money Matters, just a quick reminder that if you are interested in checking out the Bauman Letter, there is a link below. You can take a look for pennies a day and at absolutely no risk. Now today, we're going to do something a little bit different. We're going to have a cage match. We're going to call it our Monday matchup. And in one corner, we have Clint Lee, research analyst, chartered market technician, and acclaimed technical trader. In the other corner, of course, we have Ted Bauman, world-renowned economist, famed fundamental investor, and editor of the Bauman Letter. So today, gentlemen, you are going to state your cases. Fundamental versus technical analysis. What is the best approach, particularly for today's crazy markets? And we invite all of you watching to leave your comments, keep score, and let us know who you think won this matchup. Clint, you want to kick us off? I know you've got a very specific example in mind to make your case.
I do have a very specific example, and thanks for that wonderful introduction.
I'm waiting for you to ring the bell.
Yeah, and as a side note, I'm not going to be jumping in unless it gets ugly, and then I'll tear you guys apart. But otherwise, have at it.
Yeah, so I'm going to make the case for technical analysis in today's market because there's so many distortions out there that's impacting the fundamental view. You know, I mean, one of the biggest distortions of all is what the Fed's doing with its balance sheet and asset purchases and how that impacts interest rates and how that flows through to everything. And I think what you're really seeing in the stock market and across numerous stocks, it really comes down to investor behavior, investor emotions. Everyone's, you know, the tug of war between greed and fear. And there's a lot of greed out there right now. And fundamentals aside, I mean, that's what's driving stocks, especially, you know, names like Tesla. I mean, we've seen such an incredible run in Tesla this year. And I mean, this stock, you either absolutely love it or you absolutely hate it. There's no in between. And for the Tesla bulls, you know, this year has been terrific. And there's ways you can use technical analysis to play this uptrend. So I'll put a chart up here of Tesla and show how I would utilize technical analysis to try to frame up and gauge where we are in that sort of greed and fear cycle. And one of the important things is to not look at it in isolation of one factor over another. So what I like to do, and what I'm going to show you in this chart right here of Tesla, is to look at chart patterns, support and resistance levels, but then overlay a momentum-based indicator with that. So, you know, there's been two great trades that you could have entered based on that this year with Tesla. Kind of first, the green line highlighting when the stock was breaking above that $800 to $900 level. You look below that, this is actually a MACD indicator. It's just a distance between two moving averages. That shows the momentum's not extended. It's just starting to pick up. And you had a nice gain from there. Just more recently, you had, you know, similar thing happen where you had this profit taking. The stock traded sideways, but then you had the breakout of over resistance right around that 1600-ish level on the stock. And once again, the MACD indicator kind of worked off the excesses and then started to turn higher once again. So that filter on this breakout highlighting that those were two good trades for Tesla right here. And one of the core tenets of technical analysis too is just don't fight the trend. I mean, the stock is clearly in an uptrend, and use the KISS principle here to keep it simple. An uptrend is when you have higher highs and higher lows, and that's what's in place here. And the trend's not going to reverse itself until you start seeing lower highs and lower lows. And one distinction or one comparison I would draw right here is that I think the chart of Tesla is shaping up to look a lot like Bitcoin from a couple years ago. So take a look at this chart of Bitcoin. This is from 2017 into early 2018. And you see sort of this parabolic rise in Bitcoin, similar to what we're seeing with Tesla right now. But here's an example of that trend reversing from going from an uptrend to a downtrend. You see in this chart right here, when Bitcoin had peaked out around just over 18,000, it pulled back. It made another rally attempt, but made a lower high, as shown by the arrow. And then really that breakdown below 14,000 is what really then asserted the downtrend. And that's where, You know, if you hadn't taken profits, you better be doing so. And that's the point where the bears could really start to press their case. So that's an example of how you can use technical analysis, put the fundamentals aside to profit on either side of these trades.
Ted, you got a KO for that?
Well, you know, and here's, I think, the critical thing. None of that's wrong. Clint is absolutely right about his analysis of the trade. The big question is what happens next, and that's the problem with technical analysis from my perspective, is that it can tell you in a very short term what is likely to happen, but it's not going to tell you what will definitely happen. And as we see with the Bitcoin chart, we can see that after it made that big run up, getting close to 20,000, it fell again. And a lot of people lost a great deal of money on that. The Bitcoin's a bit tough to, as a comparison, because it really has no fundamentals as a commodity or as an asset. But Tesla does. And I want to look at Tesla's position from the perspective of a fundamental analysis. And I'm going to argue why you cannot just rely on technical analysis, you know, especially if you are trying to invest for the long term. Here's a chart that shows Tesla's market cap over the last 3 years. And as you can see, it's just gone parabolic. I'm not even sure if parabolic describes that. It's almost kind of like a Empire State Building sort of level. But basically, the company has just gone to the point where investors have just decided that this is going to be the big thing. So as you can see, everybody knows the stock price has gone up. The next chart shows that. It shows the rise in the stock price. But the middle part of this chart shows the trading 12 months net earnings per share. And as you can see, the stock price began to rise at the time when Tesla began to report first smaller than expected losses and then an earning. And at that point, they began to actually have a PE ratio because they had earnings. And so it went up. Problem is, for me, that you really have to look at Tesla as a company, not as an idea. And I think a lot of people tend to do that, and that's where that momentum comes in, just like it did for Bitcoin. People they like the idea, they like the headline, they like the concept, and they're convinced themselves that this is the next big thing. But in the real world, this is what you're up against. And here's a chart I want to show. It's a little bit dated, I know, and a lot of people are going to say, hey, but you know, look at more recent figures. But it shows the global motor industry. It's back in 2016, but it just shows you that Tesla is microscopic, you know, relative to the global trade in automobiles. A lot of people will say, yeah, but look at it relative to other EVs. That's not fair. You can't do that. You have to look at Tesla as a transportation option. A point of comparison is other manufacturers. Now, we know that other manufacturers are in the internal combustion world. We know that technology is changing. The big question is it changing in a way that will allow Tesla to grab market share from internal combustion engines? Now, the problem is that right now, there are a couple of different things. One is that Tesla is a high-end manufacturer of sedans. Those are a very limited market in the United States and globally, particularly in the United States. The major favored vehicle is the SUV and the pickup truck. We know that Tesla's trying to make those, but Tesla has this problem that they cannot bring the price down to the point where people actually can afford to buy them. They're very expensive. I mean, the average walk out the door price of a Tesla is $50,000. If you're going to have an SUV or a truck, it's going to have to be even more expensive because it's going to have bigger batteries. So the big question then becomes, can Tesla then find another way to, you know, to get into the market? But before I go to that, I just want to show a chart that shows what Tesla actually has done to make a profit. This is something a lot of people don't realize. This chart shows the regulatory credit sales that Tesla made over the last 2 quarters, or a couple of quarters really, going back to the beginning of 2019. And it shows you that in terms of you know, the millions of dollars that it's made, most of them have come from regulatory credit sales. What are those? Companies that don't make EVs in many jurisdictions like the European Union have to buy credits from companies that do make EVs in order to meet their targets. If they're not making enough EVs themselves, they go and they buy credibility, if you like, from a company like Tesla. Now, here are the facts about Tesla in the last couple of quarters. In the first quarter of this year, they made $354 million worth of regulatory credit revenue, which is up 64% year on year. That was 5.9% of the company's total revenue and all of its profits. So all of its profits came from selling credibility to other companies that make internal combustion powered vehicles. Same thing happened in 2019. Last quarter, their regulatory sales went up by 289% year on year. So clearly Elon Musk decided that in order to get himself over the finish line, get into the S&P 500, bump up his stock price so that he could then issue some more shares, which I believe they did earlier this year. The thing to do was to pretend to be profitable by using regulatory credits. Now, this takes us back to the question of the market, and that's what a fundamental guy like me is always interested in. The market right now for United States vehicles, and not so much European and Chinese, but fundamentally the US is about bigger vehicles. If Tesla wants to compete with vehicles on price, they have to make a smaller mini sedan, which nobody wants. Americans don't want those cars. We've seen all the major manufacturers moving away from that and moving towards making bigger vehicles. Now, that's a short-term problem. The fundamental problem for Tesla is that it does not yet have a mix of products that appeal to a broad enough audience that it can actually grow into the share price that it currently has. So a fundamentals person like me would refer you back to that Bitcoin chart and say that Bitcoin went up and then it went down again. And so for me, the lesson is use technical analysis when you're in momentum mode, when you're trying to figure out how much money you can make by following the trend. But if you're trying to make money in the long term, you have to be prepared to understand what the market is like, what the company's cost structure is like, whether it actually has a viable business plan. It's as simple as that. And so I think my conclusion is that you can't have one or the other. You need both. You want to make technical analysis the key to short-term gains if you're speculating in the market. But if you're in there for the long term, just be careful. You know, you want to make sure that you understand where a company is going, not just where it's been.
Clint, anything else you'd like to add to that?
I know. I mean, I think to Ted's point, I mean, the fundamentals can help identify sort of the longer term trends or the longer term opportunities that are there, but the technicals can really complement it from a timing aspect. And yeah, you can frame up a very strong fundamental bear case against Tesla, but there is no way I would want to personally bet against Tesla right here with what the stock's doing. And even to take the Bitcoin example, if we take what Bitcoin experienced, if Tesla truly is going to follow a similar pattern, you could arrive at a price target on Tesla of somewhere around the 2,850 to 3,000 range. And after the split, that would come out to around $600 a share. So, that's something just to, a fun little thing you can do with these chart patterns overlaying with another stock to try to come up with price targets. But once again, I would reiterate that right here, and with the market in general, you don't want to fight the trend until you start to see the more definitive signs that trend has indeed reversed itself.
Which can come all of a sudden, folks. And I think that's really the critical question. I mean, I would ask you, Clint, whether you've owned Tesla, but I won't put you on the spot. I mean, you make a good point that, it has room to run and it probably will run. My point is simply that at some point that is going to be reversed unless the company can pull a huge rabbit out of its hat. I know a lot of people have faith that Elon Musk can do that, but at the end of the day, if you're investing on faith, then you're living in a different world from the one I do, because it's all about dollars and cents. We'll see how it ends up at the end of the day, but whatever happens, take profits on the way up.
All right, great. Well, if I were going to decide this one, it looks a lot like the end of the first Rocky. I can't declare a winner, but again, I invite everyone watching, please leave your comments. Let us know what you think. Let us know what you think about Tesla, what you think about fundamental versus technical trading. And it's important to note that in subscribing to the Bauman Letter, or as I mentioned last week, Alpha Stock Alert, which is the higher end product that we do offer, you're getting the best of both worlds because you are getting Ted's expert fundamental analysis combined with Clint Lee's technical analysis, and it is certainly working out big time for our subscribers. So thank you, gentlemen. Have a nice day, and we will see you all next week.